Today, we're going to talk about the rise of Bitcoin going exponential, with many wondering where the hell the money is coming from to go into Bitcoin and what even justifies the cause of Bitcoin or other cryptocurrencies when the world already has their own currencies. Bitcoin in this year alone has went from $3,000 to over $40,000 at the time of recording, and this sort of price rise is questionable to many, obviously. The fact that Bitcoin has no real physical feel, such as other stores of value like gold or silver, make it quite a controversial asset since it's not tangible. Many would call it fake, but that could be like saying, is all the software in your computer fake because you can't touch it? No, it has a function, and so does Bitcoin. The truth is, most money nowadays, no matter what currency, it isn't tangible, such as the money in your bank account, those bond bills or treasury notes. At the end of the day, it's just a bit of paper or just a number flashing on your screen. But what creates this wealth transfer from those traditional sorts of wealth like cash and treasury bonds? We're here to answer that question, so make sure to stay to the end to find out why the rich are moving towards cryptocurrencies to store their money. If this is your first time here, make sure to like, subscribe, and smash the bell icon to keep up with the latest videos of ours. So, let's answer what exactly makes the case for Bitcoin in this world. There are many answers to this, from rising government debts, ancient banking systems, and a world losing trust in banks. Problems that Bitcoin was an attempt to solve, which if you ask me, it's doing a fine job of because of its rising value. So now we'll discuss what some of this stuff actually is. Firstly, we need to understand what money actually is. Today, we all use something called fiat currency. It's backed by a single thing, and that thing is we take the government's word that it's worth something even though a $20 bill only costs 16 cents to print. Absolutely nothing is stopping it from being worthless the next day if the government messes up the economy, as seen by countries such as Venezuela with hyperinflation. The only thing about fiat currency is that we all agree $1 is a tin of Coke. The fact that we agree to that makes it somewhat valuable, as there's trust in it, which is where the value comes from. But as more money is printed by the law of supply and demand, that money becomes less and less valuable, as shown by the way that 35% of all US dollars were printed during the pandemic to stimulate the economy. We simply can print out an infinite amount of these little paper notes, with no limit. So then you could say, why not hold things such as precious metal? Yes, they're rare, however. What's stopping the possibility of someone finding 2 million tons of gold tomorrow? Then it takes a huge plunge in value. What we're trying to say here is that dollar bills and metals have no cap on them. They'll continue being printed and discovered no matter what until the earth explodes. This is what worries people in big finance, the way that you can just print and print dollars until you get out of the rut you put yourself in. This only devalues your currency. The only thing that saved the US dollar from collapse this year is the fact that the whole world all had the same economic problems, so printed as well, so this balanced out the dollar printing. But what if this was a US problem, such as a bank collapsing and taking its assets with it? Then the US alone would have to print, and that's it making everyone's dollars less valuable when you compare it to other currencies. That literally makes you the individual who did nothing wrong lose 10 to 20% of your net worth in a matter of a few weeks. People in Venezuela have watched their savings vanish in a second when the oil prices began to drop in 2014. People there have lost trust in their currency so much that they use it as toilet paper. It only takes another 2008 of the money printer to make everyone on the earth to lose trust in their currency, economy, and government. So now we have to consider that in today's world, we have seen the highest amount of debt ever owed to each other. The US, for example, has over $27 trillion, or 130% of GDP. This has many people worried about how in the world is the government going to repay all this debt, which a significant amount is owed to rival countries such as China. If we carry on this trajectory of continuing to borrow our way out of holes, like 2008, instead of letting the free market kill bad businesses, then we could see ourselves eventually paying off more interest than principal to rival countries like Russia or China. This gives countries such as China to hold the US with a leash, with a threat of dumping US debt when they don't play China's ball. It gives many people in the financial markets who traditionally hold US debt, such as treasury bills and bonds, the fear that their investments in these so-called safe havens, the fear that they may become worthless if China was to dump all their debt on the market by increasing supply. Not to mention that pretty much all US allies will have a significant amount of exposure to these types of debts, so their economies will struggle too, which then may switch allegiances to China and Russia from the US. You can clearly see why these things ruffle investors by when you see the US dollar depreciate sharply during a political war. These political and trade wars, which is evident in Trump's administration, where he had more than a few times playing hardball with China, which had them threaten him with a dump, will cause investors even more fear. This caused a dip in the value of the dollar. Now we're going to talk about how the world of traditional finance has been distributed by Bitcoin and why banks absolutely hate it. I'm sure you've seen on the news that many banks have rejected deposits or withdrawals to any cryptocurrency exchanges of losing all your money. What they're really scared about is you're using Bitcoin, rendering their bank useless. Think about it. A bank is used to store your money, but if you converted your cash to Bitcoin, you control 100% of it, not the bank. That means you won't ever be restricted to do things like deposit and withdrawal in and out of crypto exchanges since you have 100% control of your money. This type of control is something the founder and creator of Bitcoin, Satoshi Nakamoto, strived for after the great financial crash of 2008. If you own 100% of your money, then there can't be any possibility of a crash because the bank isn't recklessly lending it everywhere, such as subprime mortgages. This is called fractional reserve banking, and within the US, a bank is only required to hold 10% of cash, and in other countries such as the United Kingdom and Australia, this isn't even a law. A bank could literally have 1% in cash at any given time. And guess what happens if a bank run happens and more than 1% of that cash is given out? The bank collapses due to no liquidity. And if the bank collapses, guess what happens to your money? It goes into thin air because bankers have gambled it away. Oh wait, you say, there's insurance on that money. Yeah, that's only for deposits up to $250,000. Now think of it. You're a rich person with multiple hundreds or tens of millions of dollars. If your bank collapses, then that means all those millions you worked for have vanished because bankers gave out shitty loans or simply leveraged it too hard. This is why Bitcoin is becoming more and more prevalent within the richer societies. They want to have 100% control of their money, so nothing like 2008 can happen again. Which is what scares banks, as they'll have no deposits to gamble your money away. Another reason is that with banks, to transact a large sum of money or even medium sums like $1 million, you need to go through many loops, such as calling, confirming your identity, and all that jazz. Not only does it cost you time, but transferring big sums of money can cost a lot, such as banks charging 0.35% of the total transaction. If you transferred $1 million somewhere, that means you have lost $3,500 straight away by just sending it to another bank account. That could pay an employee's wages for a month easily. When you compare this to something like Bitcoin, the fees are literally minuscule. In April 2020, someone had transferred 161,500 Bitcoins, or around $1.1 billion at the time of the transfer. Guess what the fee for that was? $100? $10? $8? Nope, not even $1. The fee for transferring over $1 billion was only 68 cents. 68 cents! To think, when you cut out those middlemen with their large, lavish buildings and putting corporate jets on the company's tab, you can really save yourself some cash. This transaction also only would have taken about a minute or so, whilst a bank will be like 5 working days plus the holidays. This is an absolute age when you think of companies who are requiring liquidity then and there. If that company has to wait 5 days to get their cash, such as using a bank transfer, there's a chance that the company may not even meet payroll or upkeep bills, such as keeping the electricity on. The portability and full control of it really appeals to many of finance, as well as normies who may not trust the banking system much after 2008. You have to think deeply whether you would trust someone else with your money. Your money. And there is why you see the rise of Bitcoin. It may right now be extremely volatile, however, it's still finding its price and value. Currencies such as the dollar have been around for many, many years. Bitcoin was created in 2009. Once you see Bitcoin stabilize, you'll see it being used everywhere, as the fear of fluctuation is eliminated then. This isn't only limited to Bitcoin though. As you know probably, there's cryptocurrencies such as Ethereum, who literally allows companies to build on it called dApps. These dApps allow companies to integrate blockchain trust in with their business and eliminate middlemen such as escrow services using smart contracts. One of the biggest apps currently is called Uniswap, which is a decentralized exchange. This allows people to exchange their cryptocurrencies for other cryptocurrencies without any risk of being hacked, because the whole thing is decentralized, such as a centralized exchange where you need to deposit your crypto in their wallets. My personal opinion of Bitcoin is I believe it will change the world sooner or later if it hasn't already. To think when you deposit your money into the bank, you're letting someone else control it, and only insuring it up to $250,000 is beyond my mind. If that bank went bust, then essentially you've had whatever over $250,000 stolen from you, with no one to chase after for it. All that hard-earned money accumulated over a lifetime just gone in a moment's notice by gambling banks. Anyway, make sure to comment if you believe in Bitcoin, or do you think it's just another speculative bubble that's ready to collapse and hurt so many people? Remember to subscribe, like, and hit the bell icon to keep up with the latest video of ours.